Think about the last time that you sent a text message. You hit send and almost instantly, someone on the other side of the planet gets to see it. It is free, it's fast, and it's kind of flawless. But now, you try to do the same thing with $10,000. Suddenly, the world stops being digital. Now you're back in the 1970s. You're dealing with a bank holiday, maybe some middlemen that you've, let's be honest, never even heard of, and some fees that feel like highway robbery. You see, the central question that we're answering today is quite simple, but the implications are worth trillions of dollars. Can any other coin actually do XRP's job? You see, there's a massive gap between what the internet did for information and what has not yet been done for value. When we've been told for many years that crypto is the future of money, we've seen thousands of projects claim that they are the XRP killer. They promise more speed, lower fees, and just better tech. But if that is true, then why is the global banking system still looking at one specific asset as the potential critical service provider? Now, to understand if a competitor can take the crown, we first have to understand what the job actually is. You see, most people think that XRP's job is just being fast, but it's not. If speed were the only metric, then we could just use a shared database. No, the job is much more dangerous and much more boring. It's the job of being the bridge asset. See, right now, as we kind of sit here talking to you guys, there is roughly $27 trillion just sitting idle in bank accounts around the world. These are called the nostro and vostro accounts. They exist because if a bank in London wants to send some money to a bank in Tokyo, they can't just send it. They actually have to have a whole pile of Japanese yen already just sitting in a Japanese bank account ready to go. That's $27 trillion of dead money. It's capital that just can't be used for loans or infrastructure or for growth. But instead, it is just simply sitting there acting as a giant, expensive insurance policy for the slow speed of the current system. So the job is to actually delete those accounts. The job is to provide on-chain and on-demand liquidity. And as we look even closer, you start to see that the competition isn't just fighting against a coin. They're actually fighting against a decade of regulatory groundwork and a very specific type of financial plumbing. When we talk about XRP, we often use the term bridge asset, but the Bank of International Settlements, the central bank of central banks, they use a much heavier term, critical service provider. Now think about that for just a second. They don't call it a token, they don't call it a currency, they call it a service provider. This is a massive shift in how we view these digital assets. You see, most cryptos are trying to be the new money, but XRP isn't trying to be the money that you buy your coffee with. It's actually trying to be the tool that the bank uses to move the coffee money over the ocean. Now, what are the requirements for this particular job? Because if you were hiring a coin to, let's say, move $100 million in 3 seconds flat, what on earth would you actually look for? Well, first, you would need neutrality. Now, if I'm a bank in Brazil and I want to send money over to a bank that's in Nigeria, I don't necessarily want to use the US dollar as my middleman. Why? Well, it's because using the dollar means that I'm subject to US foreign policy, US interest rates, and US sanctions. Now, in a world that is de-dollarizing, the market is screaming for a neutral asset, something that isn't a country's money. The second thing is that you need liquidity, and this is where 99% of the XRP killers die. You see, you can have the fastest blockchain in the world, but If I can't buy $50 million worth of your coin in 1 second without moving the price by 20%, you are useless to a bank. Liquidity is the lifeblood of the system, and it's something that you can't just code into existence. It takes many years of exchanges, market makers, and volume to build. Third, and perhaps one of the most importantly ones, that is you need regulatory certainty. Right? Banks are probably the most risk-averse entities on this planet. They will not touch an asset if there is even a 1% chance that it will be labeled an illegal security, or if the network could get shut down by a government. Now, we have to realize that XRP, it didn't just win its spot because of its code. It won because it went through a multi-year legal war with the SEC, and it came out with a clear status. Now that is a moat that no other coin currently possesses. Now, let's talk about the most obvious competitor, Stellar, or XLM. So, if you look at the surface, Stellar almost looks identical to the XRP ledger. It was founded by 𝗗𝗶𝘀𝗰𝗿, who was also a co-founder of Ripple. It's fast, it's cheap, and it is built for payments. So why isn't it doing XRP's job? Well, the answer actually lies in the context. You see, we kind of see this played out in a real world with companies like MoneyGram, right? MoneyGram uses Stellar, but here is the catch. They aren't necessarily using XLM as the bridge, right? They are often just using USDC, a stablecoin pegged to the US dollar, running on top of the Stellar network. Now, this is a kind of key distinction because Stellar is incredible infrastructure, but it has positioned itself as the king of the dollarized world. If two parties already trust the US dollar, well, they don't need a neutral bridge asset like XRP. They can just use a digital dollar. But what happens when the dollar isn't the preferred medium of exchange? What happens when a bank in, let's say, Thailand wants to trade directly with a bank in the Philippines? Using USDC still keeps them tethered to the US financial system. See, XRP is the neutral FX play, right? Stellar has leaned into being the digital dollar play. Now, they are doing two rather different jobs in two very different rooms. While people love to kind of pit them against each other, the reality is that they are filling different gaps in the market. Stellar is perfect for retail payments and dollar-based corridors. XRP, though, is aiming for the heavier duty, wholesale cross-border settlement, where the dollar is no longer the guest of honor. You will often hear people say, what about Swift? What about ISO 20022? Aren't they the real XRP killers? Well, this is one of the biggest misunderstandings in the space. It's kind of like saying faster email service is a killer for a shipping company. You see, Swift is a messaging system, so when you send a Swift payment, no actual money moves, right? It's just a very secure, very expensive IOU sent from one bank to another. The actual settlement, the actual moving of the value, it happens later on, often days later, through those nostro and vostro accounts that we spoke about earlier. And ISO 20022 is a new language for those messages. It allows for more data to be attached to a payment. It's kind of like upgrading from a flip phone, at least a flip phone text, to maybe a rich media message. It's a huge improvement, but it is still just a message. It doesn't solve the actual liquidity problem. It doesn't move the money. Now, this is where projects like Quant or Chainlink actually come into play, because they are often brought up as competitors, but in reality, they are supplementary, right? They help different systems talk to each other. They handle the interoperability. But once the message is actually sent and the systems have talked, you still need an asset to actually move the value across the bridge, right? You still need the settlement asset. So think of it this way. Chainlink and Quant are the high-tech air traffic controllers. They make sure that the planes know where to go and that the communication is perfect. But XRP is the plane. It is the physical vessel that actually carries the cargo from point A to point B. Now, you can have the best air traffic controllers in the world, but if you don't have a plane, the cargo, it stays on the ground. Then we have the Speed Kings, projects like Solana. Now, we see the headlines, right? Solana can handle 50,000 transactions per second. Solana is 100 times faster than the legacy system. On paper, it sounds like a slam dunk. If XRP can do the job, surely a coin that is 10 times faster can do it better, right? Not quite. You see, banks, they don't really care about the maximum theoretical speed. They care about the reliability and the uptime. If a bank is moving billions of dollars and the network hiccups or even goes down for 4 hours, which we have seen happen with many of these high-speed chains, including Solana, well, that is a catastrophic failure in the eyes of the banks. In the world of high finance, a move fast and break things mentality is an absolute death sentence. XRP has been running for over a decade with zero downtime. It's boring technology. It doesn't have smart contracts that do crazy stuff. It doesn't have 1 million applications on it. It does one thing. It moves value reliably. Now, for a central service provider, reliability is more than just raw speed. A bank would rather a transaction take 3 seconds with 100% certainty than take half a second with 99% certainty. That 1% difference, it represents billions in potential liability. Now, I do have to just stop here for a second because I'm not a financial advisor, and this video is for entertainment and, let's be honest, education. Crypto is incredibly volatile and you genuinely could lose everything, so you need to do your own research and, if you can, consult a qualified professional because your money is your responsibility. Now, if you are watching this and you're realizing that the plumbing of the global financial system is shifting right under our feet, then you might want to keep a closer eye on these assets in real time. We do have a free educational Discord where we track these developments, analyze the macro moves, and cut through a lot of the noise. It's a community who are there to stay ahead of the curve. The link for the Discord is in the description if you are curious. And if you're the type of person who wants to go even deeper, who wants to actually master the mechanics of the market, then we have actually put together some structured kind of courses over at 𝗗𝗶𝘀𝗰𝗍𝗀.com. Now, we have courses on portfolio management, risk management, various different elements of security, even trading tools like smart money concepts or Elliott Wave. Now, I am going to put a discount code for 50% off down in the description below. And of course, some of the courses are completely free as well, such as crypto security. So well worth checking out 𝗗𝗶𝘀𝗀𝗀𝗀.com if you want to kind of get a deeper understanding of the markets. Okay, back to the deep dark hole of the regulatory moat. You see, there is a document that most crypto investors have never heard of, but it is the Bible for the people who actually run the world's money. It is called the PFMI, the Principles of Financial Market Infrastructures. Inside this document is something called Principle 8 and Principle 9. These principles deal with settlement finality. Now, in the traditional world, settlement is a legal moment. It is the moment when the transaction is finished and there are no takebacks. Most blockchains have, probabilistic kind of finality, right? Meaning that the longer that you wait, the more sure that you are that the transaction is final. But banks don't work with probability. They need legal final settlement. Now this is where XRP has spent its time in the trenches by aligning with these kind of PFMI standards. Ripple and XRP has been positioned not just as a piece of technology, but as a compliant piece of infrastructure. And then there is DORA, D-O-R-A, the Digital Operational Resilience Act. Now, this is a massive piece of European legislation that basically says that if you want to be a part of the financial system, your technology must be so secure and so resilient that it is effectively impossible for it to fail. You see, while other coins are trying to attract degens and XRP, NFT flippers, XRP, it has been undergoing the stress tests required to meet these institutional standards. It's not just about being the coolest coin, it is about being the most legal coin. Now let's just think about the travel rule, because this is the regulation that requires financial institutions to share information about who is sending and receiving money. Most cryptos are built to hide that information. XRP, though, was built with destination tags and features that allow banks to attach the necessary data to stay compliant. So when you ask, can any other coin do the job? You do have to ask yourself, has any other coin spent 10 years making sure that it is compatible with the laws of 50 different countries? The answer is almost always no. Let's go back to the idea of a liquidity moat. Suppose a new coin, let's call it Fast Coin, launches tomorrow. It's faster than XRP, it's more secure, and it's legally compliant from day one. Does it take XRP's job? Probably not, because Fastcoin has no liquidity. Liquidity is a network effect. Now, if I'm a market maker, I want to provide liquidity where the volume is. If the volume is on XRP, well, I'm going to put my money over there. This creates a flywheel. More liquidity leads to less slippage, the cost of trading that is, which leads to more banks actually using it, which leads to more volume, which leads to, yes, you guessed it, even more liquidity. So in order to kill XRP, a new coin doesn't just need to be better technology, it needs to convince thousands of exchanges and market makers to move billions of dollars of liquidity from the established bridge to the new bridge. So why would they do that? Well, unless the new coin is 100 times better, the cost of moving probably isn't worth it. Now, this is why the US dollar has remained the world's reserve currency for so long. Even when the US economy faces challenges, the liquidity moat is the hardest thing in the world to actually cross. You see, this is the DeFi space, with an asset like Rune on Thorchain. Rune is a brilliant bridge asset for decentralized finance, by the way. It allows you to swap Bitcoin for Ethereum without a central exchange. In the DeFi room, Rune is the king. But Rune isn't trying to talk to a bank in Japan. Now, it actually doesn't have the regulatory paperwork to even enter the building. XRP is the only asset that has both the technical bridge capabilities and the institutional permission to walk through the front door of a central bank. We don't have to guess if this works. We actually can see it in live corridors. In 2021, SBI Remit in Japan started using XRP to move money between Japan and the Philippines. They didn't do it because they liked the logo. They did it because it eliminated the need for pre-funding. Now this is the smoking gun. Before this, SBI Remit had to keep piles of pesos in Philippines banks, right? Now, they just hold XRP, or they buy it in real time, send it across the XRP ledger, and it's converted to pesos on the other side by a partner like Tranglo. Now, in 2023, they expanded this into Vietnam and Indonesia. These are live payments. This isn't a test. This isn't a pilot program. This is the actual global financial system using a digital asset to replace the 50-year-old SWIFT system. So when you look at the partners that were involved here, Tranglo, SBI, various different banks across the Middle East, you start to see a pattern. They are all using the on-demand liquidity service. Now, is there anyone else doing this at scale? You see, we can see that JP Morgan is using their JPM coin, but that is a private ledger. It only works inside JP Morgan's walls. It's kind of like a gift card for their bank. It doesn't solve the problem for the rest of the world. Now, we see central bank digital currencies, CBDCs, being developed. But most central banks don't want to issue their currency on another country's ledger. No, they want their own. But if every country has its own private digital currency, well, we're right back to where we started. We need a neutral bridge to connect all of them. So, can any coin actually do XRP's job? Now, if we define the job as moving small payments between people who trust the US dollar, then yes, sure, Stellar and USDC, they can probably do it quite well. Now, if we define the job as swapping crypto assets in a decentralized way, then yeah, sure, Rune and others can do it too. But if we define the job as being the neutral, regulatory compliant, high liquidity bridge asset for the global wholesale financial system, well, the answer is currently a resounding no. You see, XRP, it isn't just a coin. It's a 10-year, or at least it has had a 10-year head start on everyone else. It is the result of a legal baptism by fire, I guess. It is the asset, at least the only asset, that has been specifically designed, regulated, and tested to act as a critical service provider for the world's largest financial institutions. The XRP killers are often focusing on the wrong things. They are fighting for speed in a world that wants certainty. They are fighting for features in a world that just wants liquidity. And as the ISO 20022 standards go live and the messaging part of the world just gets faster, the liquidity gap is going to become even more obvious. The world is going to realize that having a faster message doesn't matter if the money still takes 3 days to actually arrive. Now, we are moving into an era where value will move as fast as information. And in that world, the bridge isn't just a luxury, it is an absolute necessity. Now, we're not just watching a crypto story, we're watching the total redesign of how every little cent on this planet actually moves. The question isn't whether someone could build a better XRP. The question is whether they actually have the time, the money, and the legal stamina to recreate the decades of work that have already been done. Until then, the bridge remains kind of open, and there is only really one asset that's currently authorized to cross it with the world's biggest cargo. Now, we're going to keep very close eye on the flip the switch kind of moment in the coming videos. We're going to be here looking for very specific dates when this infrastructure can kind of go live in even more corridors to the kind of global standards as well. So stay emotionless, keep your eyes on the plumbing, and if you haven't done so already, hit the like button, subscribe, and check out the video that's queued up on the screen right now.